Welcome to the Elevator Pitch podcast, where I dive into interesting quality companies with promising growth prospects. The episodes are based on my Substack write-ups that you can find at elevatorpitch.substack.com. Don't hesitate to connect with me on x.com, Thread, Blue Sky, wherever you call your social media home those days. Today we'll be discussing MIPS. It's a very interesting Swedish 1 billion market cap dollars company with an 80% ROIC and EBIT margin target of 50%, 50. The business model of MIPS is fascinating. But first, let me tell you a bit about the product if you're not already familiar with that little yellow badge. In the 90s, there was a Swedish brain surgeon who was studying back accidents and helmet protection, and he realized the helmet were not designed to accommodate the risk of brain injuries from rotational forces, which means that if you have an accident while traveling, while being, in movement, the helmet will stop your head. But incidentally, as your brain is free floating in your skull, it can get injured by getting stopped so quickly and, getting bruised against your skull. So in collaboration with an engineer from the Royal Institute of Technology, they developed a low friction layer that goes within the helmet and allows some degree of movement in case of a fall, which meaningfully decrease the risk of brain bruises. And that's how the MIPS BPS or brain protection system was born. The company was then spun off as a private company and it started its incredible growth journey. They currently have about 400 patents on the system across the world. So MIPS became very quickly successful in the US bike market, and I think they did two very, very clever things. The first one is they did not try to start a helmet manufacturing company. They did not try to have their own helmets and compete with, the Bell of the world or the POC of the world, which would have been very capex intensive. It's very, very heavy to launch as a consumer brand. Now, what they did is they went the way of what they call the ingredient technology. So they designed the system so it could be integrated with some adjustment into existing helmets. They managed to convince the existing helmet brands to adapt their helmet, especially on the premium offering, by adding that MIPS layer, that MIPS component, that MIPS ingredients. And the idea was really to allow the manufacturer to upsell their customer based on the scientific claims that MIPS was carrying, that it will be a safer helmet. And the truth is, if you're buying a $200 to $400 helmet, right, quite premium, who would not want to pay the extra $20 that the MIPS system usually had? Because how much is your brain health worth to you? And it worked very well in the US, and the company quickly added new helmet manufacturer and new SKUs. So today, MIPS works with almost all of the helmet manufacturer, about 150 brands across about 1,000 SKUs. The second very smart thing they did, and the genius I think, was really to make sure you, the user, and people around you would know that the helmet had MIPS technology inside. And given the system is internal to the helmet and not visible from the outside, especially when you wear it, what the company did, they added a requirement that the manufacturer had to have a little bright yellow badge at the back of the helmet. And I think this is genius in many ways. The first one is that it prevents MIPS to be just another cryptic, techie word for something that goes into the equipment regarding the raw material or one method of production that you won't even care about. Now, this is very visible. It's part of the buying experience. Usually, salespeople will try to upsell you on a better helmet by using the MIPS safety claims, and then you see it every time you put on the helmet or it's on you. So the people you are doing activities with are gonna see it. It may spark, a discussion, creating a bit of a word of mouth effect here for the brand, and it's very distinctive and recognizable. And as a result, MIPS has very high brand awareness given kind of the niche part of the market. They have about 45% brand awareness in the US and growing 35% in Europe. Now, anecdotal evidence from forums, from looking at article in the bike world, will show that people are quite loyal to the system, especially as you can change brands, you can go for more expensive helmet, and usually you will find the MIPS one. And I can actually attest to that. I've been, initially I bought a MIPS helmet for my biking activities, and then when I needed a new ski helmet, I was looking for one actually also with the MIPS system. And if I'm looking for helmet or recommending a helmet to my families for different activities, I would usually say, hey, if you can find one with MIPS, definitely I would go with that. So at least that's something I can definitely resonate with. And that's really the virtuous flywheel for MIPS, right? Where the safety claims get them into those premium helmets that really help the manufacturer upsell, which means the manufacturers are promoting the MIPS safety features, which is increasing brand awareness, increasing demand. And that's also increasing MIPS marketing budget because they spend about 7% of revenue on marketing, right? So every new helmet is actually furthering their marketing budget, and that increased demand, and that kind of round we go on the virtuous flywheel of MIPS. From a financial perspective, the company is very interesting. The business model is very attractive. It's completely asset light. All the manufacturing is outsourced in China and in Mexico. It's very close to the large helmet manufacturer facilities. So, MIPS has a very nice 72% gross margin in 2024, and it's expanding through scale. They get paid a royalty from the helmet manufacturers to use the brand and safety claims. So, their only expense are basically two things. The first one is marketing. So they spend about 7% of sales to really further the brand awareness, to support the safety claims. And they spend about 5% on R&D to, keep innovating and keep, bringing more value to the system. The rest is mainly corporate headquarters costs, etc., which will decrease as a percent of revenue as they scale up. As a result, the company is already making 36% EBITDA margin in 2024, and they target 50% 50 by 2027. In 2021, which was a booming year because of COVID, people, everyone getting on their bike and buying helmets. The best year they made 50% 54 EBIT margin. So that 50% does not seem so out of reach in a way. I think that the main question for MIPS right now is, can growth continue? And the company recently disappointed the market by pushing the revenue target of 2 billion Swedish krona from 2027 to 2029, given the softer consumer environment. It still implies above 30% per annum revenue growth rate, quite strong still, but clearly the management admitted they were not able to meet the target so early. Now it seems demanding, but looking at the market, I think it's feasible actually. Starting with the core, back market where MIPS targets premium helmet, they have about 50% market share in the US, but only 15% in Europe. And a big part of the growth will come from MIPS being more aggressive in Europe, leveraging their helmet manufacturer relationships there, marketing more, and then letting the virtuous flywheel kind of do its thing. Now, there's also two new categories that MIPS has entered over the last few years. The first one is motorcycles, and they already have an agreement with several helmet manufacturers such as Thor or Fox or Bell, and are starting to be a bit more visible. They're sponsoring some motorcycle events, and the motorcycle helmet category is as big as bike helmet for MIPS, so it's clearly could be a huge target. It could double sales if they were to reach the same kind of penetration. In moto, there's also international element, looking at some country like China, which are now requiring people to wear helmets on their scooters, and most of the scooters and moto in the world are in emerging market. There's a lot of people without a helmet over there, so that's something also MIPS is going to be targeting. Finally, the last new market they launched is safety. Safety really covers everything from construction, industry workers, forestry, anything specialized that required head protection. MIPS has been partnering and with brands such as UVEX, for example, to bring the MIPS system within those areas to better protect professional people with the same system. With it, that bucket is also what they call leaves, which is more for military, police forces, firefighters. So really, everyone who is wearing a helmet for professional reason could benefit from having the MIPS system in case they have an accident with any rotational force. Now, the way I've tried to kind of model all of those growth buckets, right? There's three big growth buckets, right? So Europe, moto, and safety. Now, I think if you look at the units MIPS is selling, so they're selling basically one system per helmet, and based on my estimate that about 10 million systems they sold in 2024, a bit down from the 13 million they sold at the peak of COVID. And to get to their objectives, they need to sell about 38 million by 2029, so 30% volume CAGR. Half of that will probably come from bike by penetrating Europe, so that just getting Europe to the same level as the US, and the rest is penetration into moto and safety. It does look manageable given the growth rate, given the interest the company has been talking about. And that's pure volume, right? So to a certain extent, what's interesting is even if they don't get to the penetration level I've been modeling, since I'm not putting any price mix, if the company push a bit on the values they put in the helmet, they could also get price mix growth on top, which could either mitigate lower volume or just accelerate the growth faster. Now, looking at the capital structure and allocation, MIPS is a pure organic story. It's basically no acquisition, and as mentioned before, it's completely asset light. So EBITDA to free cash flow conversion has been in the 70 to 80% range ex the COVID years. As a result, the company has no debt. They actually have 3.5% of the market cap sitting in cash on the balance sheets. On the earnings call, it does not seem management wants to do more M&A, and they could be open to further returns to shareholders. Is kind of the message I got. The only use for the cash so far has been, to pay dividends, and they committed to paying 50% dividend payout ratio. But the truth is, because of the COVID moves, they have done much more. What I really like is management who is committed to dividend, and despite EPS collapsing 30% and 60% in 2022 and 2023 due to the COVID reversal, they still increase the dividend by half a krona. So it feels very safe, I would say here, even though it's a low yield at 1.4%. So in a nutshell, right, this is an asset-light company with virtually no competition, visible growth areas in Europe, motor and safety, EPS growth of more than 40% per annum if they can execute on those, and a 50% dividend payout ratio. What's not to like? Well, the valuation. The valuation is very rich at 51 times P NTM on my number. It is in line with historical, so you could say, oh, it's always been trading expensively, but it's not really very reassuring. So what I've done here is a few valuation exercises that you can find in the Substack paper. First, a DCF, so I can get to a 23% upside, assuming 2.5% terminal growth rate with a 10% WACC. I've done an IRR based on the current market cap, which gives me about a 15% WACC. So that seems very reasonable as well. And finally, I've done a bit of a P multiple analysis again that you can find on the Substack that shows that you would still make about 10% yearly TSR as long as the P does not get below 20 times P NTM, so from 50 currently, or as long as the EPS in 2029 is not below 20% my number. So again, that's quite ambitious, and you can have a look and make your own mind as you should. But I would say from the few different methods of valuation I've used, it does look like MIPS has a lot to go still. Well, as you may have understood, I really like MIPS here. I think it's very differentiated. It has a unique product, virtually no competition. It's in a very interesting niche, safety, where people don't really down trade or cut expenses. They have no exposure to tariffs because everything is Incoterm X works, so they don't have any tariff implication here. They have no debt. They have disciplined capital allocation with good commitment to dividend. And the stock is down 12% this year, so not massive, but it's still bringing a slightly more attractive entry point than maybe it has been in the past. So that's it for today on MIPS. I hope you enjoyed the podcast. If you have not done so, have a look at the write-up, which has quite a few interesting charts and market projections on elevatorpitch.substack.com. Let me know if you found this episode helpful and what else you would like to hear about. Don't hesitate to follow me and to subscribe to the Substack, to any of the podcasts. I wish you a great day and see you soon for the next episode.